Hi, everyone, and welcome to the Latinx Business Podcast. I'm your host, Randy Gomez, and if you're looking to demystify the world of business through the raw, authentic stories of Latinx entrepreneurs, you've come to the right place. As someone with an MBA and an IRS enrolled agent license, I've spent years helping freelancers, partnerships, and S corporations navigate the often tricky waters of the U.S. tax law. Now, I'm bringing that expertise and passion to this community right here. So thank you for tuning in, and you know what? It's time to talk business. Hey guys, welcome to another episode of the Latinx Business Podcast. I'm your host, Randy Gomez, and I do hold an MBA in Business Administration, and then I also hold a enrolled agent license from the IRS. And I work with clients every day, with bookkeeping clients. I also work with small businesses, LLCs, corporations, and C Corps, S Corps, and freelancers. All right, well, today's episode, we're going to focus on business survival and growing in 2026. So we had the new tax laws be approved last July 4th, 2025, and they're good from 2025 to 2028, but also most of the business provisions have been extended over for the next decade. So what that means is that we don't have to worry about these deductions going away in the next 4 years, as we see some of them that are set to expire in 4 years from the individual side of taxes, right? So the first year, it's a permanent win with the 20% qualified business income deduction, right? So what this means is, like, if you have a positive number coming from your business return or from some investments over that you have and they're coming over into your personal return and you need to pay taxes on it, you're going to get a 20% QBI deduction. So that helps reduce your taxable income, which is really good. Now, power tools, section 179 and depreciation. This is actually one of the biggest tools that a lot of businesses use to be able to deduct their current year expenses, especially if they're making massive investments. If you're making a massive investment in your company and you're buying machinery and you're, all kinds of supplies and stuff like that, the section 179 expensing limit now went up to 2.5 million, which means, you can spend up to 2.5 million of investments in your company in the current year. What that means in the past is that before, I believe it was 1.5, so don't quote me on that, but that just went up. So for larger corporations, this is a huge win. For smaller corporations and even partnerships or LLCs, you're too small. You won't get to that point. You're not going to invest 2.5 million. However, it's good to know that, like, hey, if you spend $40,000, $50,000 or $100,000 on a piece of equipment, you will be able to expense it that same year, versus having to spread the expense over its useful life, which is then spread over 5, 7, 15, 20, 30 years, however long of a useful life the IRS has classified that particular item. Now, 100% bonus depreciation. So what is 100% bonus depreciation? You also, let's say you're writing off the value of a car you purchased under the business. Now, you would normally write the value of the whole car within 5 years. It takes 5 years to write off the whole car. You purchased the car in the first year, but it doesn't make sense, right? It wouldn't make sense to expense a $60,000, a $70,000 car in the first year, because the car has a useful life. It's still going to be useful for the next 5, 7, 8, 10, 15 years now. Cars are lasting a long time now. However, the IRS has set 5 years for that. So you have 5 years of a useful life of a car. You have to expense that $70,000 within the next 5 years. So you don't get $70,000 deduction the first year. It gets spread over the next 5 years. What does 100% bonus depreciation allow you to do? It allows you to expense that $70,000 in the current year. Huge, huge win, especially if you're looking for a deduction in a year that you're going to have profits, right? Now, it's still helpful if you have losses, because it's going to help you there as well. But again, 100% bonus depreciation has been reinstated to use in 2026. All right, so research and development and restoration. So research and development costs no longer have to be spread over 5 years. You can deduct them immediately, which allows you to be able to take a bigger deduction. So when items are spread over a certain amount of years, it can go both ways. You can use it as a planning tool, or you can also, say, hey, I need to expense now, I'm just going to take it now. Just know you're not going to have any more to expense that out in the next year. So next year, you're going to have to see what your numbers settle like, and then what else you can buy to expense out that year. But yeah, that's why it's important to know these concepts as a business owner, because you can use them as a planning tool, and that will help you with, one, your cash flow. That would also help you with like what taxes you need to pay that current year. So if you have more deductions, then that means you can keep that money in your business bank account, right? So think about it. Child care credits. Employers can now claim up to $500,000 for subsidizing employee child care. This is huge for a lot of employers. A lot have families and they need to, one, work to bring money to the house, take care of that family, but then also they need to have their children in daycare so that they could be working, right? So that daycare credit is usually tied to the individual, right? You give them a credit for like daycare expenses, they use that, and then they put their kid either in a child daycare center, or they pay a personal individual person, and then they can claim that credit on their personal return. On the business side, you get the credit as long as you give the employee that portion, right? And it has to be non-discriminatory, which means you can't, make this, only the owners can take this credit. No, this credit, like, you have to be able to like offer it across your business employees, all of them. Let's see. So stock, gift, and basis. So, a quick mention of using gifted stock or equity to fund acquisitions, emphasizing the importance of tracking cost basis. So what does that mean for you guys? So if you're given stock to purchase, like let's say, for example, they give you stock in lieu of payment because they can't afford to pay you, and then you're able to become part owner, then you need to be able to track all those bases, like what's the value of the basis when the stock is given to you. Also, if it's, let's say, for example, the stock is being gifted to you by like a parent, then you need to know like what day they gifted it to you, the value it was at that day, and then what they purchased it at, because the IRS is going to be looking for all this information. Also, when it transfers ownership from one person to another, you need to keep good track of your basis, right? Like what it was gifted to you at, right? So if that's $15,000, it was gifted to you, and that was the value, then that's your initial stock price. Your parents, for example, might have been, they bought it at $10,000, now they're giving it to you at $15,000. So you get to step up in basis because it was a gift. But yeah, my final thought here would be that, the tax code is stabilized for a lot of businesses for the next 10 years. So it's a good time to use these tools to plan proactively. A lot of these deductions are deductions that businesses are looking for. So as long as you're looking for it, you should be able to call your CPA or call your enrolled agent like myself, and then discuss these items with them and run it by them, and, be able to claim these deductions. But that's all I have for you guys today. So thank you for joining, and I'll see you at the next episode. Thank you so much for joining me on this episode. Please take a moment to subscribe, rate, and share this podcast with your network. Your support helps our Latinx business community grow stronger with every listen, and I truly invite you to connect with us. Send us your questions, your comments, or even your own business stories to randy@rgtaxes.com. I would love to hear from you. Until next time, keep learning, keep building your business, and keep growing your business mindset.